Episode of Canadian Mortgage Weekly, episode number 52. I'm joined with Joe Bladdock this morning, and we have a really exciting video for everybody today with some really good content.
We really do, Sam. I'm really pumped to be here today. It is a special episode, episode 52. We don't do the Wednesday episodes very often, but when we do pop on to a Wednesday, it is 8 times a year, and really pumped to be here today. And thank you for all joining us today. Sam and I do have some really good content today. One of them being our interest rate announcement that the Bank of Canada is about to release.
That's right. Like you were saying, we meet on Wednesdays about 8 times a year, and it being December 8th also means that it is the final rate announcement for the year. So it is a big one because it'll carry us into the next year. And, there's been over the entire COVID 2021, we've seen rates holding the same. We've been monitoring the policies that the Bank of Canada has been announcing and releasing with where they're seeing the economy is at and what we can expect going forward. So we do have this week's announcement, and it appears that what they have done is kept the rate the same. There's been no change. So 2021 was a year of stability for the Bank of Canada overnight rate, as we didn't see a change in any of the 8 interest rate announcements.
Okay, that's great. And as you guys know, when we announce that rates change, what we want to make sure that you guys know is that if rates did change, those with variable rate mortgages, home equity lines of credit, variable rate car loans, unsecured lines of credit, and variable rate credit cards would be affected. But that's great news, Sam. So anyone that has those types of products in this case has not been affected.
That's right. Yeah, I feel like definitely anybody with a variable mortgage rate. Definitely this is great information for you because we've been seeing the gap rise and get bigger between fixed rate and variable rate. But again, with a lot of uncertainty in the market, the keeping a pulse on what the change is really important if you're in a variable rate loan of any kind, as you're saying. So again, if we did see the rate change, typically the payments would change accordingly, either by increasing or decreasing. But again, as we've said, the rate has stayed the same, meaning everything should be clear to the end of the new year. You can breathe easy for your Christmas holidays that, there's no change in the rate.
Yeah, that's great stuff. So, if anyone of you who have variable rate mortgages are concerned about your rates going up or down in the future, you could always give us a call. One thing that we are speaking to clients about these days is actually securing a lower variable rate mortgage, because they want to stick into a variable rate mortgage because as we've seen, the rate announcements have kept rates low. They've remained the same. And we are seeing a lot more people jumping into a variable rate mortgage right now because they are under 2%. You are able to get a lot of principal payoff. But, there are some monetary policy comments that were made at this rate announcement, Sam, that shed some light as to what's happening with interest rates in the future.
Yeah, absolutely. On the last few reports that we were looking at, they were keeping an eye on what the GDP was over, the last quarter. And it looks like, as we closed off Q3, the GDP grew by about 5.5%, as the Bank of Canada had expected.
Yeah, that's great stuff. And that's really good to hear, especially with inflation numbers being as high as they are. I know a lot of people are concerned about inflation and things costing more, but at the same time, if the economy is growing as well, that is a good sign as well to see, that overall as an economy, we're doing really well. And I'm adding on top of that, we are seeing employment levels back to pre-pandemic levels in Q4. Which is great. We've seen that reported recently from other news outlets, and we've also reported it here on Canadian Mortgage Weekly as well, which is great. So it's good to have employment levels at pre-pandemic levels, and we'll have to see what happens going forward. I know there's some, uh, you know, uh, uncertainty today with the Omicron variant,
Mhm.
with what's happening, but this is really good news. And what do you think is going to happen with the policy rate going forward, there, Sam?
Yeah, absolutely. So, in their announcement for today, they had also mentioned that they are going to continue to hold rates at the lower bound until a 2% inflation rate target is sustained. So, again, I believe it was back in October, they had said, we're looking like that's around April, June of 2022, and it looks like they're keeping the same, that it'll be in the middle quarters of 2022 that at least they're hoping to achieve that target, when we could see rates slowly begin to rise. But again, as you had mentioned, the new variant has added a little bit of unsurety again, right? It felt like we were getting our footing under us, employment rates were back, everything was picking up steam, but of course, a new variant does add some questions to what we'll see in the future. But it looks like from their policy, they're keeping things as is until their previous plan of around mid 2022.
Yeah, I guess we could see the economy take two very different paths with this
Yeah.
variant. One would be that the variant is not really a concern, and it comes and goes just like the other variants have in the past.
Mhm.
And perhaps the economy keeps roaring forward, and we have those rate increases on schedule for the spring and summer of 2022. If that's the
Mm.
case, all variable rate mortgage holders, be prepared to possibly lock in or see your payments change in the future. But the other way we could look at it, Sam, is if it does take hold and it does cause any more uncertainty or shutdowns or whatever it is,
Mhm.
maybe we could see rates fall even further,
That's
to
right.
even further record levels. You never know. We'll have to see. That's
Mhm.
part of the excitement that I find in this industry, is just wondering where things are going to go, and how the housing market is going to move from that. Because I know the housing market is very influenced by these mortgage rates.
Mhm.
So we'll see. But in terms of being influenced and how that will happen next year, we have already a schedule for next year's interest rate announcements. And I see here we have January 26th, March 2nd, April 13th, July 13th, September 7th, April 26th, and December 7th. So those are the 8 dates in 2022 to look out for, those special episodes of Canadian Mortgage Weekly, to
Mhm.
make sure that we're here to update you on those interest rate announcements. And with that, I just want to take a moment and introduce Sam Thompson. Sam is a mortgage agent with Mega Mortgage. He's been with the team now since about a year and 3/4 now, almost 2 years. Sam, you're getting there, and it's been great working with you. Be part with you on this show.
Mhm.
Sam is originally from Ottawa. It lives in Barrie. How are you today, Sam?
Yeah, I'm doing good, Joe. Thanks for the awesome introduction. I'm this close to being 2 years in the industry, so I'm excited about that. And yeah, I'm excited to be on the video. So thanks for having me, Joe. And anyone who doesn't know Joe Bladdock, Joe just surpassed 11 years in the industry, so one or two more than me. But Joe is super knowledgeable about anything mortgages, whether it's a purchase, refinance, investment property. And Joe actually lives himself in Simcoe County up in Aurelia with his wife and two kids. So again, Joe, it was really fun doing this final announcement, and it'll be interesting to see on that January 26th where we see that overnight rate sitting. We'll see what we can announce in a few months, or I guess that's just about a month away. So again, thanks for having me, Joe.
No problem. Thanks very much for that great introduction. And yes, if everyone just keeps in tune with us, we'll make sure on the next rate announcement for January 26th that Sam and I are here to give you the update then. But based on the Bank of Canada and the way they're going, I'm going to assume that we won't see really that first rate increase if they are on target with their schedule. which they're talking spring, summer 2022. I mean, March 2nd could be it, but that is technically before spring because spring
Right.
hits March 21st. So if we're going extremely technical, maybe we'll not see that rate increase until April the 13th, which would technically be spring. June 1st, that is technically spring, or summer, July 13th. We'll see.
Hmm.
Yeah, because March 2nd would technically be winter. Anyway,
That's right.
as we're getting prepared for these possible higher rates, join us next week on, oh, actually not next week, tomorrow on Canadian Mortgage Weekly at our normal time at 11:30, where Sam and I will be discussing 5 credit tips to keep your score strong for the holidays. And that is something that we see every year that some people could have some help with. So perhaps you've had your credit score hurt in the past, or you would like to have a boost. Join us tomorrow for a quick update on 5 good credit tips to keep your score strong during the holidays here on Canadian Mortgage Weekly, Canada's video weekly mortgage news podcast.